Boom! What's going on, guys? 360 Digital Closing Bell Daily Energy Market Summary here on this chilly Monday, October 26, 2020, coming to you from an undisclosed location in Denver, Colorado. As always, I am your humble correspondent, Michael Tanner, joined by the executive producer of the show, the purveyor of the show, and the director and publisher of the world's greatest website, oilandgas360.com, Stuart Turley. How you doing today?
It's a beautiful day in the neighborhood, except it's raining.
It's not just raining, it is snowing here. Woke up, it was about 4 degrees outside. So as you can guess, natural gas markets are going to be up off this cold front moving through the Midwest. We will cover all of that, plus the crude oil levels. We've got 2 mergers that happened this weekend. We'll cover. Stu's got stuff in the international news. That's coronavirus cases going off the hook. But first, guys, just subscribe. 360 Digital Closing Bell and the Oil and Gas YouTube show. Subscribe. Do whatever, make the algorithms go nuts on YouTube. We really appreciate all your support. I mean, it's binge all of the shows. Best thing you can do is just keep it on loop 24/7. Let's just loop this stuff. We really, again, appreciate all the support. As I look in, as we look at the markets today, not a good day if you were an investor and you were sitting long. All indices down at least 1.75 percentage points off increasing coronavirus numbers. Just give you an idea, guys, the decline came as data compiled by the Johns Hopkins University showed daily coronavirus cases have risen by an average of 68,000 over the past 7 days, which is a record even from the early days back in March 15th. Everything got started. On Sunday alone, more than 60,000 cases were reported. That drove markets down to S&P down about 2.2 percentage points. Nat tech stocks down about 1.9 percentage points. Dow Jones 2.5 percentage points as massive selling comes in. There was honestly some decent earnings that actually came out on the tech side, but all of that was wiped away by this coronavirus and that continued to hamper the markets. Now, on the stimulus side, we continue to chat about that. Really that faded. We were supposed to see some talks today. White House Economic Advisor Larry Kudlow was on Squawk Box on CNBC this morning, came out and said, things are still moving forward, but talks have slowed down. So I talked to our long-form podcast this morning about how I think a deal's going to get done this week. I don't know anymore. I mean, it literally takes one day for sometimes the sentiment to shift. But with coronavirus cases continuing to spike back up, if we do happen to see another lockdown, first off, it's going to send markets completely tanking. So hold your horses here. Second off, we'll probably see a stimulus then. So I think as the markets continue to turn south, that brings us closer to a stimulus. Now, is that going to happen before the election, after the election? Who only knows? And if you're trading right now, don't just go off stimulus news, guys. Be careful when you get in and out of this thing. On the crude oil side, markets took a hit because of a Libyan oil force majeure in one of their El Gel fields. I forget what it's called. I think it's El Field. Stu, is that the field that got turned on?
I think you've called it El Jefe.
I mistakenly called it El Jefe. 70,000 barrels from Libya get turned back on as a force majeure comes offline. That sends markets just absolutely tanking 3 percentage points on the downside, 38.51. Part of the reason why is now that this field is turned back on, as Stu's going to mention, there's a path towards 1 million barrels coming online from Libya, which would be an incredible number. Back into the curve, didn't like it either. 40.88. I mean, that 12-month strip does not look good. I think your prediction this morning about being bearish oil this week, probably going to be right, Stu. Natural gas, on the other hand, though, saw a 2 percentage point rise up to 303. Most likely because we're about to see about 16, about probably 10 to 15% of that natural gas production come offline in the Gulf of Mexico due to a hurricane. Also, though, what we're seeing is a cold front coming through the Midwest, and that's going to affect probably the next 4 to 5 days. We're going to see very cold throughout the Midwest. I mean, certainly we're sitting here, it's like 7 degrees outside right now, Stu, and we're sitting here in Colorado. It's affecting. You said you got rain over there in Oklahoma, so I mean, this entire Midwest is getting absolutely slammed with cold weather. That's going to drive the front month contract up, and you can tell it's a weather-related event because the back end of the curve, Stu, is only up about a 0.5 percentage point, so fairly flat, $3.08. Talk about the flatness of that curve. 303 on the front month, 308 on the back month. Not good. XOP took it in the shorts today. E&P companies down over 5.3 percentage points on a total 42.54. Oilfield services did a little bit better. Thank goodness. 98.23, about 3.8 percentage points on the downside. Give you an idea of our biggest movers on the downside. Oviton, the artist formerly known as Encana, not great, down 8 percentage points. They're a nice Canadian operator. Does someone think they're going to get snatched up for a low premium? I don't know. Matador Resources down 9 percentage points, $8.18. And Cosmos Energy, our biggest downsider on the day, 9.7 percentage points, down at 120. On the upside, decent numbers. Evolution Petroleum Company up 7 percentage points. Alliance Resources Partners up 7 percentage points. And finally, Midcon Energy Partners, limited partners. In the final act of investors shareholder destruction. They do actually gain 25 percentage points, up to $2.62 off news that they will merge and sell out to Contango Oil and Gas. Before we cover that, Stu, what's on the international news desk?
Hey, Michael, it was a busy week.
Holy smokes, was it a busy weekend for you? If you haven't had a chance to listen to our long-form podcast this morning, The Oil and Gas Show, iTunes, Spotify, or YouTube, holy smokes, you had about 4 or 5 big ones that dropped.
Oh, you bet. Hey, first one on the block is we are traveling around the world at India. India may see 206 billion. What's a few billion between friends? They've got a investment going on, push by the Prime Minister Modi, and we applaud the folks, the management of India, because they have been fighting for the lowest kilowatt per hour for all of their people.
And they're doing it without any shame. They're just saying, hey, we're after lowest kilowatt hour. Wherever that leads us, that's where we're going.
And they're doing solar, wind, nuclear, 6 new LNG plants. And this one is now they are reaching out for oil and gas to help fill in the areas that they cannot get the other ones too. So my hat's off to the India whole team there. That was really big news. Iraq is in talks with France's Total for 2 new gas projects. This one is actually kind of nice. I asked you this morning, let's see if you can remember from our podcast this morning, who's the number 1 flaring outfit in the world?
It was Russia.
All right. Guess who's number 2?
Iraq.
There we go. And so Iraq.
Just for all you sitting at home, I had the answers to the quiz before he gave it to me, so don't think I'm that smart.
Yeah. No, you're not. And so when Iraq wants to lower its independence on Iranian electricity, reduce the gas flaring, and they're partnering with Total to get new ways to capture the flaring and turn it into energy. So we tease about Iraq a lot, but this is actually something for us to keep a track on the news desk with Total to see how well they do in capturing the flaring. Our hats off to them.
And we're at the point now, I mentioned this on the show, I'll just say it, we should not have to flare natural gas.
I agree.
It's 2020, almost 2021. The fact that we still have to flare natural gas is beyond me.
No. I am a big natural gas fan, and why we have to flare it kind of irritates me. Or as we say in the South or the Oklahoma, chaps my chicken. But here we go. We are now off to Libya, and you called this field this morning El Jefe. It's I think it's the El Feel oil.
Yeah.
Now, in the last 4 weeks, Libya is almost like Como, never-ending supply of jokes. So, this one has given us some more here, and that is OPEC and OPEC Plus are just not able to keep Libya in line. And now with this new field that was supposed to come online on the 24th, it came online yesterday or today. It came online today, and it is 70,000 barrels per day in production. They're going to the article says 1 million barrels per day. All the other articles and other sources I'm seeing are 1.2 million barrels per day. And that is having a worldwide impact on the inability.
Back end of the curve is down 2.3 percentage points off that very fact, Stu, that there's a path now to 1 million barrels coming back on from Libya, which would be their peak that they hit in like 2018, mid-2018, before sanctions.
2011, when Gaddafi turned himself into an idiot. Here we are. We're looking at Chevron, and Chevron when we took a look at Chevron before, you have the other majors. Chevron made the most profitability no matter what they were doing. A couple things. Chevron bets on Middle East gas riches and everything else. That is because of Noble. That is because of the risk that they're taking in Noble in the Mediterranean. And some of the little nuggets in this really are the Middle East produces a third of the world's oil and 1/6 of its natural gas. Several years ago, it was voted that everything in the Mediterranean was worthless. They've all changed their tune now. So the Chevron executive said that Noble could not have done it without us. So quite honestly, big news on Chevron betting in what Exxon and all the other majors are getting out of. So, I mean, hats off to Chevron.
Yeah, I mean, I'm a big fan of that. When everybody zigs, you might as well zag. It seems like an odd statement, but I truly believe that. When everyone's going one way, sometimes it just doesn't hurt just to try to go the other way. Maybe it works, maybe it doesn't.
Oh, no. The execs at Chevron are doing better, in my opinion, than BP or Exxon.
Are they still – when are they reapplying for their jobs, though?
I don't know.
We're waiting for those – we're intently waiting their applications to come back. Anything else on the news desk, international side?
No, more coming later.
Moving over into the U.S. oil patch. Poor offshore workers right now. Tropical Storm Zeta's pounding in on them right now, Stu. Over 15% of Gulf of Mexico production is already shut in. It's still 175 miles off the coast of Cozumel, expected to make landfall later this week. If this makes landfall as a tropical storm or a hurricane, which they're still not sure about, it'll be the 7th tropical storm / hurricane that makes landfall this year. The 7th one, Stu. There's already been 6 evacuations. If you go look at BP's 2 biggest offshore platforms, Atlantis and Thunder Horse, this is the 6th time they've been evacuated. Holy smokes. You mentioned this in the pre-show, the capital expenditure that it just takes to send people there and back, not good. 4 mobile offshore drilling units that are contracted to BP are out of there. Equinor says it's a shutting in and taking off people from its Titan platform. Shell says it's ceasing some of its offshore drilling. Occidental hasn't gotten back. I mean, if you guys remember, just to give you an idea, here's the names of the hurricanes that have hit. Delta, Beta, Sally, Marco, Laura, Cristobal, all have been hit from June through October. There's even some refineries off. Citgo's Petroleum, Lake Charles Refinery in Louisiana is still offline. I'm not too sad that Citgo's refinery is back online. We don't need to be shoveling money to the Venezuelan government just quite yet. It's just been a rough hurricane season. This will be probably the biggest since 2005. So it'll be very interesting to see the fallout from this. We'll be sure to cover that. And, I'm not quite sure the percentage we'll get up to. Currently, as I said, 15% oil, 6% natural gas offline. Who knows what those numbers will get up to. We had 2 mergers over the weekend. First, Husky Energy and Cenovus. And, this is a Canadian deal that creates the 3rd largest operator in Canada right now. What this also does is doubles Cenovus' refining capacity. Husky had about 410,000 barrels of refining capacity compared to Cenovus' 250,000. So they create a much larger refining capacity. The squawk that I'm hearing is that the assets that Cenovus has are much better than Husky's, and this deal was done mostly because Husky needed to sell out, and their largest shareholder, as we covered on the show, Lin KI, was looking to make a deal, but he was really forced to sell at this point, couldn't quite merge after some interesting things surrounded a deal they tried to do in 2018 and some of the political stuff that happened around there. But it creates, as I mentioned, this sort of deal where, how much do you degrade your upstream assets in order to gain some more refining capacity? It's a bet Cenovus is making. Just to give you guys an idea, the deal was for about 3.8 billion Canadian dollars in 2008. Husky's market value was just over 38.2 billion Canadian dollars on the Toronto Stock Exchange. So There's also a 5-year standstill agreement, meaning that Mr. Lin's company won't be able to sell its shares until that agreement expires. So that hopefully signals to investors that this conglomerate won't unload its shares and really drop the price down. That was really key in Cenovus acquisition. They didn't want any of that to happen because they do know that, as we're calling an LKI, is motivated to make a deal and probably motivated to get out of there. So there, that five-year lockup agreement, very interesting. Cenovus has about 61% of that combined business. Yeah, I don't honestly know much about the Canadian oil patch, so how this works, I don't know. All I remember is that Cenovus took over ConocoPhillips. They paid about $17.8 billion for ConocoPhillips in 2017, and that has absolutely fallen flat on its face and collapsed. Added too much debt. Market didn't like that deal, so hopefully this can be a little different. I think again, this is much more for the downstream and the midstream stuff than I really think this is taking over Husky's upstream. But only time will tell. Final M&A of the day, Contango Oil and Gas and MidCon Energy Partners agree to a deal. Give you an idea. It's an all-stock agreement worth about 5% premium based upon the 15-way volume-weighted price average. And what's funny is on the press release, they touted like 20% premium. So it's just hilarious how this all stuff works. Each MidCon unit's going to get 1.5 Contango shares. Contango shareholders are going to control about 87% of the combined entity. MidCon will have the remaining 13 and will be on a fully diluted basis. It's been approved by the board of directors. Of course it has. 2020, late 2020, early 21 will get approved. Just remember something interesting. They had their borrowing base Contango upon this new acquisition increase from $75 million to $130 million and is scheduled redetermination for May 1st, 2021. Hopefully, if you guys remember, MidCon Energy LP stands for Master Limited Partnership. Hopefully this deal signals the end of what has been a disastrous run for Master Limited Partners. Unless you were a Master Limited Partner, then you made out like a fat cat. But if you were an investor, a shareholder, or an employee of one of these companies, you got absolutely shafted by these things. Everyone remembers the disaster that was Lin Energy, Master Limited Partnership. All of these midstream companies that have continued to destroy value over time, Master Limited Partnerships. Great for the partners, not great for the investors. So as the final act, hopefully in what was a decent and terrible run for Master Limited Partnership, hopefully this deal, it dies with this deal. But hey, we'll find out, Stu. It's just kind of funny that Contango Oil and Gas CEO is a former real estate guy. Of course, he's the one that finally takes the blow to Master Limited Partners. It just all makes sense when it's in the end. Stu, we miss anything today?
No, but it was a lot of fun listening to you.
Well, with that, guys, we're going to go and get out of here, let you guys get back to work. Thank you for checking out 360 Digital Closing, the daily energy market summary here on this gorgeous October 29th, 2020, episode number 145. For Stuart Turley, I'm Michael Tanner. Guys, we will see you tomorrow with another show.